We are joined by the management of Mahindra and Mahindra Financial Services, and joining us is the MD, Mr. Ramesh Iyer. Mr. Iyer, thank you so much for speaking to Bloomberg Quint. Let's first talk about your NCD issue. What is the total amount that you're targeting to raise from this NCD issue along with the green shoe option? And would the cost of funds for you for this NCD issue be upwards of 9%?
Yeah, so we're planning to kind of base issue is 500 crores and the total issue size, therefore including what we can retain, would be around 3,500 crores. And it has got two aspects, which is institutional as well as the second is the HNI and retail. And the rate range from 39 months to 120 months range between 9.05 or 9 to 9.05, going up to 9.5.
Okay. And sir, if you could just give us a breakup of your total, liability side from the public deposit side and, the mix of NCDs, what is the total, exposure there, meaning what is the breakup, if you could just give us on the liability side?
So currently our FD programs would kind of absorb around 8% of our total liability side, and if we were to look at this 3,500 crores which would come in additionally would also mean around the same. So I think between FD and this kind of retail debentures or the wholesale debentures together should be anywhere between 15-20% of the total borrowing program.
Okay. And sir, talking about the cost of funds, a few months back there was this big scare of the NBFC issues wherein the cost of borrowings for most of the NBFCs had gone up. When you're offering, a rate upwards of 9%, would that impact your, net interest margins, or would you be able to pass this on to your borrowers?
I think we've always maintained that ability to pass on, even if it is there, one has to be very prudent about how much does one want to pass on. So even our own borrowing cost has gone up by 50-60 basis point, and we've passed on about 25 basis point. I think the OEMs would pick up some cost, the dealers pick up some cost, and the consumers would pick up some cost. So I think it's a question of everyone sharing the cost and not passing it all on to the consumers completely, because we don't see this kind of an increased cost as a permanent feature. They are the current impact, and over a period of time they are expected to taper off. So therefore our view has always been that every entity has to share this burden a little. So consumer is taking a burden of only about 25-30 basis points.
Okay. Sir, I was just looking at the auto data for the month of December. Be it the tractor sales for Mahindra and Mahindra or be it Maruti Suzuki, everybody has reported, decline in sales volume in a scenario wherein, the festive season has been muted for the auto industry. The December sales months have been, muted. So on an overall basis, how do you see your business getting impacted because of the slowdown in Motown?
I think we are in a fortunate situation in the sense that we have deeper penetration in rural, and rural definitely has performed better than urban to an extent, so we get that benefit, one. Two, I think we are a very multi-product company, and therefore growth is not dependent on any single product. Our growth has come from multi-product. We have now become a significant player both in commercial vehicle as well as in pre-owned vehicle, which has been almost a new segment compared to previous year, which means which were on a lower base. So that gives us the additional growth. So we continue to maintain our growth stance of 15-20% growth story, which we said, and we believe that that is doable, and we continue to maintain that.
Sir, since you spoke about newer streams, which is pre-owned cars and the commercial vehicle side, can you also give us an idea as to how really are you looking to expand your presence in the MSME space as well?
So MSME for us has been, we have looked at three verticals on MSME, which is we have clearly looked at auto, engineering and agri as the three vertical space in which we wanted to play the SME role. And that comes from our understanding of this industry as well as our very large relationship with the OEMs in this industry. Currently, I think we have a book of about 7-8% of our total book is represented by SME. I think if you look at a 3-year horizon, about 15% of the book would be represented by SME or MSME, and which would come from these industries.
Okay. And sir, my final question on your growth guidance and asset quality. You said that you will be maintaining your 15-20% growth outlook, but can you just tell about the asset quality front? We had this big shock of demonetization and GST, which is getting absorbed by the system. But now moving forward, as we move in fourth quarter and FY20, how really do you see asset quality shaping up for you and the industry?
I think if you look at last couple of quarters, maybe 3, 4, 5 quarters, every quarter has registered a decline in our gross NPA. And I'm on record to say normally the first half in rural is a very pressurizing half where normally the NPA goes up. But in this 2 quarters gone by, we have actually seen NPA stabilize or even go down. And the second half for rural always is a better half with the crop coming in, the cash flow improving, the infra cash flow coming in, etc. And if that was to happen, which is what we're witnessing, we would only see declining trends of our NPA.
Okay, thank you, Mr. Iyer, for speaking to Bloomberg Quint and taking out your time. And we wish you all the best with this NCD issue.
Thank you. Thank you. Thank you.
So that was the management of Mahindra and Mahindra Financial Services. They plan to raise nearly 3,500 crores via the NCD issue, and the total interest rates that they are offering for this NCD issue is upward of 9% per annum.